Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to discuss how the cannabis market is developing in Canada and what the industry is doing to reshape it is Shah. He's Managing Director at Cannabis Benchmarks, a division of Newly Data Services. It's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Nice to join you today.
And how is the Canadian cannabis market developing?
So as in any other commodity, you have your bumps kind of when you start off in the industry. Canada had a rocky start. We started off with supply shortages, and it was nothing to do with supply not being available, but it was more to do with the way it was regulated in terms of the packaging and the shipping. A couple of months after legalization, we ran into demand exceeding supply at a massive rate. But as that happened, a lot of producers started bringing on lots more capacity to kind of help balance the market. And as that supply started coming on, capacity exceeded demand at an extreme rate. And now we're in the situation where we have a lot more supply than demand. But the good news is that retail demand is picking up. At the recreational level, we're seeing a steady growth in recreational demand. We model current usage at about 18,000 kilograms per month. And that's been growing at a 7% average growth rate per month over the last year. So we're definitely on the right track. One of the big issues that the cannabis industry faces that no other commodity really faces is competition with the illicit market. In a traditional sense, most cannabis users went to the illicit market to find their supply. Illicit markets are traditionally cheaper in price, better accessibility because there's some sort of local delivery system already installed. But that is changing rapidly. We're seeing a lot better accessibility with the big build out of retail stores across Canada.
So would you say the current supply exceeds demand by a large margin still?
Definitely. So Statistics Canada reports on current demand levels and they report on inventory. They do not report on the supply month to month, but we can kind of back into that number. In terms of where inventory sits right now, at the federal and provincial level, there's over 36 months of current demand, or demand based on where supply is right now. The producers are definitely moving in the right direction. They're dropping prices to interact and work against what illicit markets are doing, which is pricing lower than the legal markets. So there is definitely steps being taken by the producers to go in the right direction.
How important is the build out of retail stores across Canada?
Retail stores is a really important part of the entire supply chain. We see a very strong correlation between the retail store build out and the sales that the Statistics Canada reports each month. In terms of the retail build out, we're currently at about 1,100 stores. That's 600 stores and more than we were at last year at the same time. In June, Statistics Canada reports that we had $200+ million of sales, which is a massive increase compared to where we were last year at the same time, about 120% more sales than June 2019. At Cannabis Benchmarks, we do have a projection for the 2020 calendar year. We're observing sales growing at a rapid rate for the end of the year, and we're just looking to end up the year with $2.3 billion of sales in total for the legal cannabis sector. That's more than double what we had last year for 2019.
And of course, the next question is, are the stores evenly distributed across Canada?
That's a really good question. They are not. Every province has a different licensing method. Alberta is a very interesting model to look at. They kept the licensing process very streamlined and efficient. 48% of the stores across Canada lie in Alberta, with only 10% of the population. On the flip side, Ontario only has 13% of the total retail stores, but they have 40% of the population. Ontario took a very different method upon legalization. They allotted stores through a lottery system. So the first stores didn't really pop up till 4 months after legalization. They're definitely picking up the pace right now. Ontario has about 130 stores at the moment, but that's still a lot lower than what we have in Alberta, which is over 500 stores.
And to wrap up here, how are Cannabis 2.0 products helping shape the Canadian cannabis sector?
The Cannabis 2.0 products are very important. And just to recap what the Cannabis 2.0 products are, that's a category or a derivative of cannabis products such as edibles, beverages, lotions. It is a really important factor in the cannabis markets because there's no competition from the illicit markets. So in terms of what the cultivators are targeting, they're targeting a novel product to a customer base that has not seen that product from traditional sources. Additionally, there's the possibility of growing the customer base overall. A lot of consumers are opposed to smoking the product, but they might be more inclined to having a beverage or a vape or even an edible. So in terms of growing the overall customer base, I think the Cannabis 2.0 products are going to be a very big piece of it. In Ontario, for just for reference in terms of sales, the Ontario Cannabis Store dropped some stats for March sales, and they said 20% of their overall sales came from Cannabis 2.0 products. And we see that trend continuing throughout the end of the year.
I appreciate the insight. Thanks so much for joining us on Trade Talks.
Perfect. Thank you. Thanks for your
And
time.
thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.